On behalf of CEBRI, I want to thank everyone for attending this seminar. The title of our discussion today is Doing Business in China, Investment Environment and Corporate Strategy. This is the last of a series of 4 debates organized by CEBRI in cooperation with Veirano Advogados, Veirano Lawyers, and in association with the Brazil-China Business Council, CEBC. The first was about management of foreign companies in China. The second was about agriculture and technology. The third about digital companies. And today's topic is about the general environment for investments. Today's environments and challenges that companies will have to face in their Chinese strategy. All the previous seminars are there in YouTube if you want to watch them. Let me pass on the floor to Ronaldo Veirano for his opening remarks.
Thank you very much, Ambassador Karamuru. Good morning, good afternoon, and good evening, depending where you are located today in the world. My name is Ronaldo Veirano, and I am the chairman and founding partner of Veirano Advogados, one of Brazil's largest law firms, with 260 attorneys located in the cities of Rio de Janeiro, São Paulo, Porto Alegre, and Brasilia. I'm also a member of the Board of Trustees of CEBRI. Veirano is a full-service firm which caters to a national and international clientele in the 5 continents of the world. We were founded in 1972, and this year we are very proud to be celebrating our 50th anniversary. For many years now, we have had a keen interest in the Asia-Pacific region. And approximately 3 years ago, we created within the firm a China desk, which is devoted to assisting Chinese clients who are interested in investing in Brazil and Brazilian clients who are interested in investing and doing business in China. Our China desk is led by our partner, Marcos Ludwig, assisted by Professor Evandro Carvalho, who is one of the few Brazilian sinologists. Our China desk practice has expanded significantly over the last few years, and today we represent a substantial number of Chinese enterprises which have relevant investments in Brazil. China, as you know, is Brazil's largest trading partner, and both trade and investment between our 2 countries are bound to continue an upward trend. This is the 4th and last webinar which we have had jointly with CEBRI and with the participation of the Brazil-China Business Council, focusing on the practical aspects of doing business in China. The first 3 webinars focused on infrastructure and energy, agribusiness, and digital economy and innovation. We're extremely pleased to wrap up our webinar series by bringing to you a seminar whose topic is Doing Business in China, Investment Environment and Corporate Strategy. To close this series of seminars, we are very fortunate to have assembled a group of very well-known and highly competent experts on China who will address the political, legal, and investment environment in China, as well as a corporate strategy to enter and successfully survive in this mammoth Chinese market. Our speakers today include Ambassador Luis Augusto de Castro Neves, who heads the Brazil-China Business Council, Dr. Robert Kuhn, International Corporate Strategist and Investment Banker, Ms. Claire Liu, a partner of Zhong Lun, a very well-known Chinese law firm, and last but not least, Mr. John Russell, Managing Director of Sandpiper North Head in China. The webinar will be moderated by Ambassador Marcos Karamuru, a former ambassador of Brazil to China, an international advisor to CEBRI, and a member of the Brazil-China Business Council Advisory Committee. Ambassador Karamuru has moderated the 3 previous webinars I have alluded to with great success, and we are particularly happy that he has once again agreed to moderate today's event. On behalf of CEBRI, of Veirano Advogados, as well as on my own, I wish to extend a warm welcome to our moderator, speakers, and to our audience. Wishing you all a very successful webinar, I now turn the floor over to Ambassador Luis Augusto de Castro Neves.
Thank you very much, Ronaldo. Well, good morning, good evening, and everybody, depending on where you are. The Brazil-China Business Council is very happy to be a part of this joint venture in this webinar, Doing Business with China, which will deal with investment, environment, and corporate strategy. As a matter of fact, the Brazil-China Business Council is a bilateral institution which is formed by two independent chapters, although we work very closely. One in Rio de Janeiro, which I have the honor to preside, and the other one in Beijing, which is being conducted by the Chinese Council for the International Investment Promotion. The sections of the chapters of the CEBC have a total complete autonomy, and they act in accordance with the interest of its associates. And the main purpose is to perfect the commerce and investment between the two countries. We deal with the structural themes, with the structural issues of the bilateral relationship. As all of us know, China is now the main economic partner of Brazil, not only in terms of foreign trade, but also in terms of the flow of investment into Brazil over the last decade. So it's very important for us to try to avail ourselves of the expansion of Chinese international trade and investment, so that our relationship becomes even more fruitful as far as both countries are concerned. The efforts for the expansion and diversification face two main obstacles, in my view. One is the relatively low presence of Brazilian firms and associations in China, and the absence of a coordinated effort to improve the image of Brazil in China. And that's the opposite of what happens with Chinese firms in Brazil or other countries. We lack a certain definition or outline of a strategy, a long-term strategy in our relationship with China. We are known as a big seller of commodities to China without having a more relevant presence in the Chinese market as a whole. So therefore, the CEBC has presented the Brazilian government with a number of suggestions regarding the bilateral trade, bilateral economic relationship, and has introduced the theme of sustainability in our relationship with China. There are a number of issues that should be taken care of, such as in the field of finance, the question of green finance, of low carbon economy, and also the investments in infrastructure. So therefore, there are a number of issues that can be very important and do have a big potential in our relationship with China. But for this, it is of the utmost importance that the Brazilian side should try to outline a more precise strategy to find out what do we want from China, what we don't want from China, because we know it's easy to find out what the Chinese want from Brazil, what they require from Brazil. And I was mentioning, my friends here, the fact that once a former Chinese ambassador to Brazil once told me that you Brazilians do not sell to China, we Chinese buy from Brazil. So this is a relationship which should be more balanced, and perhaps one of the purposes of this webinar is precisely that: how to do business with China in a more comprehensive way, and that this relationship can be more fruitful for both sides. And once again, I thank you very much, and I return the floor to Marcos Caramuru. Thank you.
Well, thank you very much. Let's go straight to the debate. We start with Robert Kuhn. Robert, as Ronaldo said, is a renowned China's expert, an international corporate strategist, an investment banker, and a public intellectual. He advises multilateral cooperation, multinational corporations in China in their strategies. And he was one of the very few foreigners awarded the China Reform Membership Medal by President Xi Jinping. Two of his books, Como os líderes chineses pensam, and Como a China superou a pobreza, were published in Portuguese. Robert, let me start with you saying, you are one of the very few foreigners that have access to the highest level of decision makers in China. And many of the Chinese observers like me, we are entertaining the question, what will happen after the pandemic, in the post-pandemic reality? What's going to be the Chinese approach towards foreign investments? Will China be, more a closed economy or an open economy? What's going to be the strategy? I think we all agree, as we were discussing previously, that the decoupling strategy by many countries that try to discourage their companies to be in China is not working. But in a way, China seems to be less confident in the global supply chains, and it seems to be protecting itself and its own economy. How do you see the reality? What's your assessment of today's reality in China?
Thank you very much for the kind introduction and the excellent question. This is an axial time. President Xi Jinping has come up with this phrase, unchained. The changes in the world have been unseen in a century. You can argue with the exact time on that, but it is positioning China for new realities in the world. And China is very concerned about this, especially now in a very political year that's coming up. So that's why this conference is extremely important. It's a pleasure to participate with my distinguished colleagues. And the concept of the conference, doing business in China, investment environment and corporate strategy, is right on point at this axial moment when there is change in China's way of thinking. So in my brief opening remarks, I know we're going to have a debate later as well, I want to introduce both the investment environment, particularly for Brazilian companies, and corporate strategy. What does that mean? It means the ways of thinking and doing business that are unique to China. As I will describe, there's no other country on earth that has the business characteristics that are China. I call it a politico-strategic framework for understanding how to do business in China. I've been working in China for more than 33 years now with senior leaders, as you've said, on policies and international communications, and with multinational corporations on formulating and implementing their Chinese strategies. And I can give you some examples of that later. Some of it, of course, is confidential. We can discuss China's macroeconomics later. I think everybody listening is familiar with China. They follow the numbers. Last year's growth, 8.1%, but the fourth quarter at 4% shows a significant slowing due to real estate, COVID, other kinds of issues as China looks to the future. But here I want to highlight, again, these 2 points, investment environment for Brazilian companies, why now this could be a very good time for Brazilian companies, because they may, in fact, have a competitive advantage at this time of change. And due to U.S.-China frictions, which we could spend, several weeks on, and the image of China falling dramatically in the last couple of years, and in most developed countries, China is recognizing the resistance they're finding, that China must be looking for partners, countries and companies that will not be as they would look at it in tow to the U.S. issues, which everyone recognizes is not short term and will be enduring for a long period of time. And given Brazil's size and potential and independence, and the BRICS relationship, Brazilian companies are a natural for China to show the world, which it wants to do, that its economy is still open for business, even though they have this so-called dual circulation strategy, which is really saying we're not going to eliminate our trade and export relationship. We're going to do both, develop the internal markets for self-protection. But indeed, that is a primary trend occurring. In addition, China has become sensitized to the charges of exploiting their trading partners, buying natural resources or commodities of their trading countries, their partners, and then shipping manufacturing goods. And this is true with Brazil, it's true with African countries, creating inadvertently, not China's plan, but creating what they've been accused of a new kind of economic neo-colonialism. And this is causing problems. So China has to think differently, and they are thinking differently. They're forced to, and enlightened leaders, and China's leadership is very smart and very experienced. They recognize this need, and they're being advised to get out ahead of the problem, so that they're not just reacting to these charges of economic neocolonialism. And so China needs to help its major trading partners develop manufacturing and technology. Again, we talk about this later. Now, let me get to the main part of what I want to talk about, and that is how to do business in China. First statement is, naturally, you do all the things that good business requires everywhere in the world. You need to do that in China, whether it's legal or financial or various business relationships. And that's for sure. And China will have its own legal environment, economic and financial itself. But here's the point. In China, if you really want to do serious business, you need to do more. And this is unique in the world because of the nature of the political system. And to understand how this works, I need to take you through a brief understanding of the realities of the political system and how it really works. If your business is small, this may not much matter. But if your business is large, or you're a big company and you really want to have long-term business in China, it's essential to understand how this really works. So let's start at the top. President Xi Jinping. A recent party plenum memorialized in a historical sense, which is a bigger conversation, what's called two establishments. And number one is establishing Xi Jinping as China's core leader. And the second is establishing Xi Jinping's ideas, Xi Jinping thought, we'll explain that, as the party's bedrock official doctrine. Now, to many people, those two establishing sound like party speak that is opaque and sort of Marxist and sounding and irrelevant. And in fact, it's terribly relevant for companies that want to do business in China. And I want to explain why. First of all, let's see what these things mean. When China says the core leader, what that means is that once you're designated core, which only in retrospect, Mao Zedong, Deng Xiaoping, in retrospect, Jiang Zemin was specifically made core in order to deal with post-Tiananmen Square problems. Hu Jintao was not made core, which is very significant. Xi Jinping is core. That means effectively his opinion or vote, if you will, outweighs everyone else in the Politburo, in the Standing Committee of the Politburo in total. So everybody else can be on one side, Xi Jinping can be on the other side, and Xi Jinping wins the vote. That's what core means, that he outranks everyone else put together. In terms of the thought of the ideas, the second establishment, the official name is, it's a mouthful, Xi Jinping Thought on Socialism with Chinese Characteristics for a New Era. It's a mouthful, but when you know China, every word of that conveys a meaning for those with ears to hear. We're not going to spend time on that today. What I want to do is follow this very simple logic to get from those two establishments to how you do business in China. It would seem that's an unbridgeable gap that have no relationship to each other. I want to show you why there is a direct relationship. So first of all, as you know, the Communist Party of China, the CPC, the party, is the perpetual ruling organization of the country. This is in the Constitution, the vanguard of the people, et cetera, et cetera. The party is based upon an ideology. The ideological foundation of the party is Marxism primarily, and then derivatively socialism. And now, and has been for the last several years, Xi Jinping is the singular, sole, contemporary arbiter of what Marxism is and what socialism is. That's what this Xi Jinping thought on socialism with Chinese characteristics for a new era. That's what it means. That has been put into the constitution of the party in 2017, at the last party congress, the 19th. And now through this historical resolution, it becomes even more embedded in the historical memorialization of critical party theory. And so by the Constitution and by putting it into this historical context, it solidifies it in dry cement. It cannot be changed. Like the old law of the Medes and the Persians, if you know ancient history, once a king put a law into effect, he couldn't change it. So here's the point. Even if Xi Jinping holds no position in the future, he gives up all his positions, of which he has many, many, three major ones: head of the party, general secretary of the party, chairman of the military commission, and president of the country. And he's head of a dozen or so what they call small leading groups, which are the key elements in reform and security and various other things, cyber, et cetera. So if he gave up all of those positions, he would still be the paramount leader of the country for the rest of his sentient life, because he is, through that very simple syllogism: party controls the country, ideology controls the party. Xi Jinping is the sole arbiter of ideology for the party. Therefore, he is in total control of the party and the country for the rest of his sentient life. And of course, he will continue to hold the top leadership positions in formal sense as long as he likes, basically. Now, how does all this elite politics relate to your company doing business in China? Now we get to the point. This is critical. Now, you have to understand there's an important department of the party called the organization department. This is like a personnel department for the country. And in your companies, people who are in the audience have companies. Personnel is always an important part of their company, but it's never the most important. And rarely will the head of the personnel department become CEO of the company, maybe from marketing, maybe from finance, maybe from legal, but hardly ever from personnel. That's different in China. In China, the organization department is arguably the most powerful in terms of how the country is working, because it is responsible for all personnel in the government at all levels, central and local, and for all executives and state-owned enterprises. So the whole country is, the personnel in the country are dependent on the organization department. So for large Brazilian companies, companies doing business in China, just about every senior person you meet and work with in China depends on the party's organization department for his or her total career. If they're chosen, promoted, demoted, trained, everything is dependent upon the organization department. So each person that you work with is going to think, how is doing business with you going to help me on my reports to the organization department? So how does the organization department evaluate personnel? That's what everybody's going to be thinking about. And they do it by how well they conform to and advance the party's fundamental ideology, which is Xi Jinping thought on socialism with Chinese characteristics for a new era. So to the extent that one understands Xi Jinping thought and how it applies, one can position company business to reflect these elements, because that's what the people working with you will want to achieve. They don't care if you're profitable. They don't even care if their own company is, or a state-owned enterprise company. They want to look at their own personal career, and their personal career will be dependent upon how well your business conforms with that thought. Now, I'm not talking about altering your company business or doing different business or allocating additional resources. No, but by reframing what you are doing in the language of the party that's reflected in Xi Jinping thought. For example, and we can talk about this later, one overarching principle today is common prosperity. I call this way of thinking about doing business in China my politico-strategic framework for doing business in China, and later we can give examples. Thus, there is very significant opportunity for Brazilian companies today to do business in China. And I want to thank the organizers, CEBRI, Veirano, China, Brazil Business Council. I look forward to continuing our work on Brazil-China business.
Well, thank you very much. This was an excellent presentation connecting the overall political reality with the individual company's business reality in China. And I very much appreciated your idea that China at this moment is looking for partners. It's a good moment to have a strategy, a Chinese strategy, and start doing business in China. Our next speaker is Claire Liu. Claire is a lawyer and partner at Zhonglu Law Firm. She has provided legal services to a number of state-owned and private sector companies in the areas of equity and debt mainly, but covering all legal areas in China. Claire won the Deals of the Year Awards of Business Law in 2019. Claire, the reality for foreign investments in China is always changing. And if I'm not mistaken, just now, at the beginning of January, we have a new piece of legislation in place devoted to those who want to invest in China. The negative lists and the authorizations. How do you see the general legal framework? What can you tell us about today's legal framework?
Right. Thanks, Marcos. Thanks very much for this opportunity to speak here. So I'm going to share doing business in China in the context of legal environment. So basically, just as Marcos just said, we are going to have a new company law issued recently. So basically, I want to talk about this legal framework, legal environment from seven points. So first of all, just want to talk about a little bit about the business environment in China. So basically, China's economy now is on track to become a second largest global country in the world. So we really have a very fast growing major economy right now. So currently we are legal department yes, the foreign investment law was implemented in 2020. This is very important for the foreign investment. So this law basically writing put a new reform here, like we now adopt pre-establishment national treatment plus negative list management system into the law. So now the pre-establishment national treatment rules require that foreign investors and their investments shall be enjoyed treatment no less favorable than the domestic companies and domestic investors. So simple to say that now the domestic investors and foreign investors, they enjoy the same rules and the laws and the policies in China. So this is a very important change. This is number one. And then a major manifestation of further reform and opening up of China is the negative list for foreign investment. So recently, we have this issued years ago, but now the length of the negative list for foreign investment assets of 2021 edition has been continuously shortened, and more investment fields have been opened up to foreign investors. So just like Marcos, you say, this is really a good timing for foreign investors to make investment in China. And also, look at, you scan the world right now under this pandemic situation. Most people, Western people feel, and also we in China, we feel that many Western countries, they probably, they do not understand China that much. So we feel, sort of isolation in the world. So we really welcome Western investors from various industries, because I think China now is ready. We changed the laws, we improved the business environment, we are ready to welcome investors to come to China. So then the main changes are as follows. For example, we further deepening the open up of manufacturing industry. Automobile manufacturing, this industry, we cancel restrictions on foreign equity ratios in the manufacturing of passenger vehicles, and also we cancel restrictions on establishment of equity joint ventures in China, because previously the same foreign investor, they are not allowed to invest more than one equity joint venture in China, but now this has been canceled. So we also open up broadcasting and television equipment manufacturing. This is 100% restricted before, but now we cancel these restrictions on foreign investment in this area. And also we have a very good development to explore ways to relax access in the service industry in China right now. For example, market survey, social surveys. I mean, for Western people, you're probably not familiar with China. Previously, these market surveys, social surveys, they have a lot of restrictions, basically. So now we have canceled these restrictions on foreign investment assets. This is also a major change. So look back in 2020 and in 2021, the reality here is against the background of a sharp decline, in China, global cross-border investment, largely affected by the pandemic. But in China now, PRC has, in 2021, we attracted 149 billion US dollars of foreign investment. So with a very steady increase, remaining the second position in the world. So although, we understood that, some Western investors probably has still, hesitated to make investment into China, but now the market, look at the statistics of the market. Now we have according to 2021 Business Confidence Survey released by the European Union Chamber of Commerce in China, that 60% of respondents plan to expand business in China in 2021. And also, according to a survey by the United States Chamber of Commerce in China, 81% of PRC funded these PRC funded companies expect positive revenue growth in the Chinese market this year. So pretty good trend right now. This is from the business environment side. So if you look to the market opportunities in the PRC, I think, you know, if you look at the regional opportunities, you know, China now further encourage foreign investment in central area in China. So not like traditional areas like Shanghai, Beijing, Guangzhou, these, you know, top tier cities. But now, you know, Chinese government encourage foreign investment into the central of China. There are a lot of opportunities out there. And also, there are also other like industry opportunities as well. So the Chinese government further encourage foreign investment in the producer services, like in the field of R&D and design, you know, new entries such as 5G mobile communication technology, you know, development of blockchain technology, these new industry. And also in the field of commercial services, new entries such as high-end equipment maintenance and a digital production line transformation and integration are, you know, very popular right now. So also follow these encouragement, the government also issue a lot, you know, incentives to encourage foreign investors to make investment into China. At the national level, first of all, to encourage foreign invested projects for those self-use equipment imported within the total, you know, investment amount. For those imported self-use equipment, they are all exempted from customer duties. And for the corporate income tax, you know, certain areas, for example, central areas, you know, western areas, and also Hainan province, at the new free trade zone area, they reduce the corporate income tax to 15%. Previously, that should be 25%. So also the foreign invested in the industrial projects are also in the encouraged the category. For example, if you purchase land use right, then you probably can get a incentive, like you have the decrease, you know, have a almost 30% discount of the land price. These are, you know, these are the some of the incentives that we have currently in China. So what I want to say is currently, I think China, we try to reform the legal environment. We also try to reform the business environment so that to attract more and more foreign investors to do business in China. Now I think, you know, what I will try to deliver this message is doing business in China become easier because, you know, there are a variety of recent reforms, you know, so just like I said, you know, we now shorten our negative list, you know, it's more friendly to the foreign investors. They can enjoy, you know, the national treatment in the establishment stage with the domestic companies. So this is, you know, further to help our foreign investors. I mean, then there are also some tips for the foreign investors to make investment in China. First of all, you know, for those foreign investors, if you don't understand territorial sovereignty, then this is a trouble. This is become a trouble when you're doing business in China. For example, you talk about, especially talk about referring to Hong Kong, Taiwan, or Tibet as countries, or quoting the Dalai Lama. This is not good in China. So companies, you need to, this is something that you need to be particularly pay attention to. So for, apart from this, look at these, look at the current legal environment and the business environment. I think the whole trend here in China is just encourage foreign investment. We welcome foreign investment from Western countries. Some foreign investors, they ask me that, whether Chinese government officials, they play a very active role in the management of the national economy. Yes, it is. This is a very much Chinese. I mean, Chinese government, they play a very important role in the market. But I think, the market access is almost the same for foreign companies and for the domestic companies. So foreign investors, sometimes they ask me, is there, often limited for imported goods or service providers, for foreign service providers? Actually, this is, I think, for me, my understanding is, so the market access for domestic companies and foreign companies are almost the same. So it doesn't have that many differences, especially now the legal environment has a big change. So the foreign investors and domestic investors, they enjoy the same treatment and incentives in China. Yeah. So, and also some foreign investors do ask us, do consult us that whether we, foreign investors, when we want to leave China, whether or not we can bring our money back to our own country. This is 100% yes. I mean, we do have a very clear system, law and the policy to allow foreign investors to bring their profit, their if they get exit from Chinese market, they do allow to bring their profit back to their own countries. There are very clear laws to be followed for the foreign investors. So there, you shouldn't have those worries in this regard. And also for now, because the reform of the foreign investment related law, so now it is quite easy for foreign investors to establish their presence or set up their entity in China. So previously you probably spent take you 1 or 2 months to establish a company in China, but now, like, if you have everything ready, it only takes you a week to set up your entity in China. And they, for the government, they have their investors helping center. They will help you to go through the whole procedures, and then you will find these procedures are much easier than before. So, in conclusion, I think the business environment and the legal environment have both been improved a lot recently under this pandemic situation. So, I think this country is ready for the investment from other places in the world. Marcos.
Well, thank you very much. This is quite useful information for those who are planning to invest in China. Let me go to John Russell. Before I go to John Russell, I want to acknowledge the presence of José Pio Borges, the chairman of CEBRI, in the audience of this debate. John Russell is the managing director of Sandpiper Northhead, a strategic communications and public affairs consultancy company focusing on Asia and headquartered in Beijing. John has had more than 16 years of experience in China, advising different companies, multinational companies, and also Chinese companies. Among his previous experiences, he was for almost 10 years the executive director of the American Chamber of Commerce to the European Union in Brussels. John, you have been advising companies for a long time in China and discussing with them branding, participation in the market, and a number of topics that have to do to the company's strategies. I remember when the trade war started between China and the United States, sitting at your office with a number of American companies discussing where are we heading to, what's going to happen. So I can imagine that companies always resort to you asking about the future. Now it's my turn to ask this question. As Robert said, it's a moment of change. And then I want to ask you, how do you see the reality? What kind of advice you would give to companies?
Thanks, Marcos. Yes, and it's good to engage with you again after a number of years since when you were in Beijing. In fact, those questions you asked, I think I'll come to, talk to in the coming few minutes. What I'd like to do is give an overall business perspective and really try and give the listeners or the participants here a little bit of a sense, and as you requested, on what are these specifics that are required or differences of the China market, which Robert also touched on, in order to successfully enter a market and sustain the company within the market. And really what I'd like to do is first look at, just put on the table, as it were, the opportunities that there are in China, then the differences and specificities of the market and the business environment here. And then the third one, and really more the most tricky one, dealing with governance, and both governance of the country and how it manages markets, but also governance within companies to be successful. And really, just let's go back and just remember the opportunities of China. It's an $18 trillion US dollar economy, and as Robert pointed out, running at about, well, in this past year was 8.1. It's now slowing down. Its trade position is $6 trillion. And over the last decade, it's been roughly about 30% of global growth complete. And even in 2020, when it kicked off after the COVID closed downs, it was running at over 50% of global growth. So there are, that's a market to be reckoned with. Also, the nature of it, which has been raised, it has an ambitious economic transformation plan to move, as we know, from labor and energy intensity to high value development, advanced manufacturing, digitizing value chains, and as President Xi noted in his November to the UN, it was, low carbon, to hit peak carbon in 2030 and neutrality by 2060. That is going to be an extremely tough set of targets. Over the years I've been here, that we've seen a growth of leadership in certain areas of technology and sectors, certainly in the rail, fast rail, subway rail, electric power equipment, communication, IT. Surprisingly, despite all the IT problems, there's elements where China is actually a lead, particularly on 5G and the IPR related to it, nuclear, AI, and e-commerce. However, it has weaknesses, which are well known: integrated circuits, aircraft, medical devices, and really services that are really still suboptimal, such as finance, professional services, and so on. However, as Claire has talked about, there is a commitment to opening up. There are the negative list and the encouraged list. Just to give, there's 31 items on the negative list, and in the free trade zones, of which there are 21, it's down to 27. The area that is important to business is really encouraged. The encouraged sectors, and that are in the order of 480. And really that is a signal, and encouraged in China means there's subsidies behind them. And that is an important area to say. And they're quite where the weaknesses, or where there's a lacking in China's industrial and capabilities and skills. And what we see is there's areas which are going ahead quite strongly. And my one advice to anyone going into China: try and follow the growth sectors, chase the growth sectors. We do a lot of healthcare. Healthcare has been a golden era for the last 5 years, with the opening up of big pharma. Has been here doing over 20. Most big pharma companies have been doing over 20% revenue growth. Over 20% growth in the past few years. And that is a happy time compared to, say, if you're looking, the same companies in Europe are growing at 2% a year. Finance has also been a happy time. And irrespective of US-China disputes, those healthcare and finance have been steaming along. The other area is, and such things as autos. There is a transformation in the auto sector. China has approximately half the world's new energy vehicles, and they were 3.5 million this year. I'll talk about that a bit later on as examples. The other thing is in international opportunities. We can debate international opportunity. I think there's a view from North America and a view from Europe about, and it is true because we've done our own studies on attitudes to China, Chinese investment and so on. But we've got just the BRI, the Belt and Road Initiative. I haven't got the latest figures, but for trains, but in 2020, there were 1,000 trains a month going to Europe. And that is changing the dynamics of Central Asia and into Europe. It's certainly changing the logistics costs because all those containers that go to Europe have to come back. So the logistics costs of Europe for European exporters into China are changing significantly. Also, there's this, from the 1st of January, there's the regional a comprehensive economic partnership with Southeast Asia and with Japan, South Korea, and Australia, New Zealand. It's really, that is building a Chinese economic zone in much of Southeast Asia, certainly. It's really a follow-on and with the actions that the Chinese have done since the crisis in Asia at the end of the last century, by lowering tariffs for all the components. So you build the supply chains. And interestingly enough, RCEP's greatest strength is the very innovative way of handling rules of origin, which is a technical thing, but it makes it easier for those countries to just work together and engage and have supply chains built. That also is available to anyone set up in the region. So for Brazilian companies, that's also an important thing to note of what's happening in the region. The other thing is, yes, the economy has been slowing down. But in the past week, the government has actually embarked on an expansionary program. The Prime Minister, Li Keqiang, announced tax cuts will continue. Now, in the last year, to keep alone, there has been $1.35 trillion in tax cuts for micro and SME companies. And on Monday, announced that the local government bonds for Q4, which is 190 odd billion US dollars, they're going to accelerate that pace into the bond quota for 2022. So that's a very significant priming and a shift that is reminiscent of the global crisis. Probably not as much money yet, but we'll see how it goes. What I'd like to do is just talk about then the differences and specificities of the China market. First of all, are cultural differences, and I'm not going to talk about that. All I want to do is put a marker down, because we could have 3 or 4 webinars on cultural differences and business cultural differences. But a few that I'd like to talk about is the pace of change, which is all I've said up to now is what I call is the good news. Now we're getting on to the news that it is actually somewhat challenging. And the first, for any business, foreign business going into China, it is to deal with the pace of change and decision-making within the market and within the government, coming from the government. To give you 2 examples, in 2020, there was no regulatory, and the COVID came through, there was no policy or regulatory environment for any telemedicine. Within 1 month, all the policy and regulation was put in place, from the ability of companies to set up the telemedicine. Patients can avail themselves of those facilities, right through the chain of getting pharmaceuticals delivered and insurance paid. That is remarkable when other countries seem to take years to put those things in place. Just to give you, we do a lot of work in the new energy vehicles and the autonomous vehicles. In December alone, on autonomous vehicles, there were 7 major pieces of policy came out. So that creates challenges when you're in these transforming sectors. A second area that is quite different in China is the Chinese love to do pilots. Well, on anything, they put them into different pilots in different parts of the country. And they then choose what from out of those pilots, what the overall national policy will be. To give you, in the fuel cells and new energy vehicles, there are 5 different city policy pilots going on, different groups around cities and provinces and clusters. And that can be confusing to many outside from other countries. On the autonomous vehicles, there's 39 pilots going on. And I know when dealing with American executives sitting in on Zoom meetings on that, that can be mind-boggling of, well, how do we involve ourselves in so many pilots and so many things happening? It's a bit like a Chinese wet market. The important thing is then, in success in China, I would strongly recommend choose your partners carefully. And having a partner ecosystem is very important to navigate. Many companies will go, even though when they don't need a JV, will go into a JV in order to embed themselves into a very different business environment. And really, I suppose the fourth one I'd like to just mention is the hierarchy of government. We always talk about Beijing and the central government. The central government essentially makes the policy, but where most of the money is, as far as implementation and subsidies and so on to assist for facilitation of business, is at the provincial or at the city levels. So they're just a few of the differences and specificities. So be cognizant of those differences, and a change, it then drives the business plan that you develop and implement. Last thing I would say is think of the governance of the country. And there, first, to operate within the rhythm of the market. And really, China has a very specific rhythm of 5-year plans. And then, as I mentioned earlier, chasing the growth sectors, or if they're not growth sectors, to look at niches, particularly on technology or capabilities or skills. We see that with many European companies in such things as the energy sector and so on, or even with nuclear and so on. So chase those either growth sectors or niches. It then build down into at every level of government, there is an implementing 14th 5-year plan that goes down into yearly work programs. And again, aligning and try to build a dovetailing of your objectives within the work programs of the government of whatever level you're dealing with, or state-owned enterprise. The other thing is, well, it's somewhat of a difference. Business in China is very different. I've got more experience elsewhere in Europe and to a certain extent Australia. But compared to other markets and dealing with the differences on that, to operate a business in China, you have many more touch points with governments at various levels. So in no other market have I dealt with where you would not only teach or go through how to do dealing with the media and so on, but you do training on how sales and marketing people deal with local bureaus. They're dealing with government officials and so on. So that's one element. China is such a large and a, what could you say, market that cannot be done without a firm commitment. And what we see is where their companies do get into difficulty is where their China strategy is not well anchored into the board at the board level and is left to business units to take independent decisions. I would strongly advise that a strong China strategy, and really China's not the market to have absent landlords, as it were, running the companies. With that, I think I've used up my time. We can talk about other things about common prosperity and the various, what's happened in the last 6 months, specifically in market management and the rejigging of markets. We can have that in the Q&A. I would put it back to you, Marcos, and over to you.
Well, thank you very much. These were very interesting observations as well. Well, if I can extract any conclusion of this debate so far, I would say the legal, first of all, there's a commitment to open up. China is really committed to keep opening the economy and accepting foreign investors. The second conclusion would be that the legal environment is not that much complicated. However, companies should pay attention to the political realities and to the many, many changes in policies that happen on a regular basis, some of those mentioned by John here. Then I turn back to Robert to ask questions, or a question connected to this observation. China, I think it's unavoidable to say that China is becoming more ideological at this point, isn't it? The whole description you made about Xi Jinping becoming the core, and the fact that he has a stronger voice than the other members of the Politburo shows that China is becoming more centralized, and in a way is becoming more ideological. This means that the clashes with the West are going to be unavoidable. And some of the clashes may happen in topics which are very difficult to deal with, such as the regulation of digital companies, regulation of access to information. There are a number of topics that are going to be very complicated. At the same time, we see the Chinese government telling the Chinese companies, be aware of investors outside China. You see all the rules about the IPOs in the US market. So there's a sense that what they are saying is that Chinese companies should rely on financing themselves within the internal market more than in the external reality. So this creates a certain level of political, quote unquote, uncertainty about what's going on. So against this background of background of China becoming more ideological, potential for clashes, more evident, and this difficulty with foreign investors in Chinese company, do you think that this will contribute to an environment of uncertainty, or companies should still rely on the general idea that China is opening up?
Certainly, the senior leadership led by Xi Jinping wants the world to know that China is opening up and desiring to interact with the world. I would be a contrarian and say that all of the ideological rigidity and centralization that you speak of, which is certainly true, and the elimination of even modest dissent in the market is in fact the domestic reality. But for foreign companies who understand that and know how to deal with the political system and know how the people think, as I described earlier, and as John mentioned, the implementation of this is very much at the provincial level. So to understand how it works centrally in the politics, but then working at the provincial level, which is where much of the resources is, you can really have a competitive advantage in the market, because many companies in the world, especially in the Western world, led by the US, there is going to be much more hesitation for all the reasons that you said. But I think that gives opportunity for companies that can exploit the this quasi decoupling or this quasi uncertainty for their own interest. Now, I really want to emphasize that there's a difference economically today as compared to several decades ago, where if you came with capital and some technology or product idea, you can do well in the Chinese market. That can't happen anymore. Chinese companies are very strong. For example, one reason they are opening up the auto market to foreign companies to allow them to go above 50%, allowed to go to 100%, is that Chinese auto companies are now very, very strong in the marketplace. So they're not worried about that. So it's not so much of an opening up. It's a little bit of window dressing on that. They also want foreign companies in to stimulate the economy to make Chinese companies more efficient. So there are very driving reasons why China wants to open up in terms of the economy, and it's not being done because of foreign pressure. That doesn't work in China. It's being done because Chinese leadership, primarily President Xi, recognizes Liu He, his primary economic advisor, is very strong on this, that China needs to open up for its own market to be sure that Chinese companies remain competitive. It's very strategic in their thinking. And so if you know how to deal with the political system and you have a product that a priori makes sense in the market, there's really substantial opportunity. But it cannot be generalized on a macroscopic basis. You really have to look microeconomically at individual companies and situations and determine, are they in the right market? I had one CEO of a U.S. company that surprised me by showing how they had immediate access and their venture got immediate approval, and they've been very profitable. But they were making a kind of component that was really needed in China's civilian aerospace program. It was not a particularly high-tech product, but because it was needed, I'm exaggerating to make the point that when they're needed, there's tremendous opportunity. But this can be looked at a priori to determine by the company itself what the opportunities would be. But if a company is in a market that can and its product looks like it's positioned that it could work in China, and if you understand how the political environment works, it's really a terrific time. And I think it's especially so for Brazil, because we have this added layer on top of that, is that China would very much like to build relations with Brazil in a positive manner that will get a good PR in Brazil and in the world.
Yeah. Luis Augusto, you want to ask a question? Go ahead.
Well, thank you. Well, just to have a comment or a question that either Robert or John could help to clarify me. I find that China nowadays have three main strategic concerns. One is obviously an exogenous one, is the zero COVID policy. So it's a explicit goal on the part of the Chinese authorities. The other one is how to keep the economy growing at around 5% per annum, which brings about a certain contradiction with the previous item of zero COVID. And the third one would be the need to have the growth from now on compatible with environmental climate measures and long-term goals. So how does the Chinese authorities or the Chinese society is dealing with these three issues: zero COVID, 5% growth, and environmental issues, given the fact that these issues can be contradictory among themselves.
Robert, you want to start?
I thought he addressed it to John.
John, then go ahead.
I'm happy to talk about anything.
I think he addressed both of you, but John, you start.
All right, Ambassador Lewis. To be frank, yeah, I think you've got the three priorities there. To be very frank, we've seen in the last few months and the last 6 months where priorities aren't driven by those and others trump them, as it were, not the person, but the kind of card game trump. In as much as two things that have occurred. One, all this behavior on the internet platforms, the use of antitrust to rein in the Alibabas, Tencents, Didis, and so on, and what's happened on the property sector and what's happened with reining in them, and what's happened with the education sector is a demonstration that the real priorities of the government and the party are to have a stable social situation. And as they call it, the three mountains decline, which are housing, education, and healthcare. So in that area, this common prosperity and this bringing in the third of every company is required, or those with excessive, what's seen as profits, operating effectively and efficiently on the market is the first tier. Second, pay your taxes. And the third that's being introduced is philanthropy. The second area that's been kind of an educational experience with has been this whole energy issues where there was shortage of energy at the end of autumn and coming into winter. And in that regard, the government did a 180 turn on and got, because the energy mix was not operating effectively. And in fact, went back to coal to ensure that energy was, because the different provinces were not hitting their targets on what they call the energy, not only the overall use, but sorry, the energy intensity. A whole range of provinces, 9 of major provinces, weren't hitting their energy intensity. That means they were using too much energy for their targets were. So they literally closed down a lot of capacity. And so what we had is a turnaround back into coal. So social stability, I think, is the key for the party and the government, and everything builds out of that objective. I just would put the point that, you know, the West has been looking at China and it's opening up now for 40 years and wondering what is, how can the party manage this opening up and to be effective with it. I'm not sure President Xi or the party hierarchy are thinking in terms of that. I think it's the other way around. With the opening up of the economy and all that goes with it, with foreigners and that, how does this influence the party? Because in many ways, the party is a bit like the Catholic Church, where priorities 1, 2, and 3 tend to be to maintain the organization and to maintain its resilience to carry on. I just throw that in as just a thought of how to start analyzing what's happening.
Robert, I have to turn back to you now.
Thank you.
Go ahead.
Yeah, I totally agree with what John says, that the primary interest is protecting the party's leadership. For ideological reasons, yes, but because Xi Jinping and leadership really believe that their leadership of the party is indeed the best for the Chinese people. I mean, that's what they really feel. I know that from firsthand conversations with the most senior leaders, including President Xi Jinping. I spent more than 2 hours with President Xi when he was party secretary of Zhejiang province in 2006. I had met him in 2005 and 2006, spent a long time together. And I can give firsthand, I'm a firsthand witness, not secondhand, firsthand, that many of the policies that he's talking about today in the environment and in social concerns, he told me back then, and there was no thought that even he would be in the Politburo, much less leader of the country in such an extraordinary way. So what we're seeing in the country, related to what I said about Xi Jinping being core and directing the country in the last year, has been a reflection of his views. I mean, there's no other way around it, that his views on what socialism is and what the people should be are reflected in policies. And this concept of common prosperity is really important. And it was used as a transition from China's previous focus on poverty alleviation, which occurred from about 2013 to 2020. And I was actually very much involved in that. I wish I could say it was because of my own cleverness and design, but it had nothing to do with that. Poverty studies were not my area of interest at all. My background is in science, and I like science and finance, but I was asked to get involved and to study poverty alleviation in China, and I spent a good deal of time from about 2014 to 2019, right before the pandemic, on poverty alleviation, to understand how important that is to Xi Jinping. Xi Jinping said poverty alleviation, I spend more time on that than on any other topic. I don't know of any other national leader who has said that. And as soon as that a bit artificial definition of extreme poverty was solved or was achieved at the end of 2020, within days, they shifted to this concept of common prosperity, which is a multi-decade plan. But under that rubric of common prosperity, what we saw was a whole series of different social engineering kind of things, like eliminating of the tutoring industry and restricting the gaming time of children, the reining in of the internet platforms, so that there's more competition in society, and that there's no, frankly, threat to the party through something that they can't control. And the last time I counted, there were like 18 different policies, all under this common prosperity, because it was easier to just lay them all out. And so what we're seeing really is the full expression of what Xi Jinping believes is in the best interest of the Chinese people. You and I may disagree with one or more of these things, certainly on freedom of the press and various things like that, but there's no doubt that why he is doing it is because of what he believes is the best interest of China in the long term. And so given that understanding of where we are and what the direction is, I would argue that there is great stability and certainty in China, with one asterisk, and business is always concerned about certainty. So in terms of the political system, in terms of relationships in China, it's very stable because there's no political opposition to Xi Jinping overtly. I'm not talking about behind the scenes, but no. So you have this long-term stability, which is wonderful for business, with the one exception. The asterisk is, if you're a venture capitalist and you invest in a company, you always take key man insurance if there's someone who is indispensable to that investment. So any company investing in China is, in a sense, taking self-carried key man insurance on the life of Xi Jinping. Because if something happens to him, physical health or whatever, then there could be instability and different things in China. But all indications are that this year, stability is the most important thing. So the 20th Party Congress will be the finalization of a long step of 7, 8 very specific steps over the last several years to establish Xi Jinping and his people, the people who he has most confidence in, who he's worked with in the highest levels of government. When I was with Xi Jinping in 2006, there were only 4 people in the room: my partner and translator, and Xi Jinping's chief of staff. That was it. That person, the chief of staff of Xi Jinping, is now the party secretary of Shanghai. He was prior to that party secretary of Jiangsu province, and a leader of the largest economies in China. And no doubt next year he will be in the Politburo Standing Committee. So that will give a great deal of certainty in terms of the political system. And you can absolutely read from this year what are the priorities of how Xi Jinping thinks in terms of the different industries and the different capabilities. And so it's a very clear environment when you have eyes to see exactly what's going on. That doesn't mean it's good for every company by any means. One has to be, as I said, very careful to target the kinds of companies that can be successful in China. But if they can, and you understand the politics, this is really a time of opportunity.
Claire, do you want to, John, go ahead.
I'd just like to pick up what Robert said and kind of put it down into how that impacts business. First on the anti-poverty campaign that ran and finished with the 13th five-year plan. Working with American companies there, because every part of every ministry and every province had to support certain poor areas of the country. They were allocated. And companies could also support ministries and on particular villages, particular programs. So that's exactly what companies did that wanted to engage with the government. And as one of our companies said, we had our head of China with the vice minister walking around this area on Dongbei up in the northeast of China for 3 days, and that was worth it was worth the effort. And so, but not many American companies would do such a program in any other country. They have their own CSR, but not engaged with government programs. On the second thing, the impact of such actions on, say, the Alibaba and the internet platform programs, that Robert picked up the rationale for it all too, elements of not only it was being too disruptive compared to, say, a whole range of things, including the banking system. But there were social issues that needed to be addressed for stability, in as much as, and you saw the ability of the venture capital industry in China pivot from out of internet platforms into other areas of innovation or startups in biotech, AI, and so on. And in fact, despite all this disruption, as it were, was in the markets late last year, venture capital actually increased 50% year on year investment. So that's an example of how that China and the Chinese private sector pivots to meet the requirements of the government, and particularly for poverty alleviation. China has had and has a Gini coefficient that they're not proud of at this point in time. And that's an objective. To give you some metric on that, the year before, there was a dollar billionaire produced in China every 36 hours. And yet there was still areas of poverty. So that led to the party to actually also reassess its priorities.
Well, I think no doubt about the fact that there's a lot of smoke when we talk about China, but companies should be able to look through the smoke and see reality as is and understand reality as is. And this is not a simple process, but it's not an impossible proposition when companies really devote themselves to understand China better. We are approaching the end of our debate. Claire, would you like to say something? Go ahead, your microphone. Go ahead.
Yes, Marcos. Yes, I appreciate Robert and John, what you said just now. I just want to say, China has a very different culture in the legal system, and then we have different language as well. So what I want to say is I agree with Robert and John that China now has a very stable political system. And like you guys just said, that President Xi Jinping probably will stay in this position for a very long time. This won't gonna change in a long time period. This is true. And also here in China, we do have a very stable economy system as well. So if you make investment in top tier cities, for example, Shanghai, where I am, we do have a very good business environment and legal environment too. I mean, we also have a stable legal system. I mean, I have to say that, it is always very complicated for you as a foreign investors to make investment in a country where this country has different legal system, culture, and language. So although political is very important, I have to recognize, and also I agree with you that now it's not like 5-10 years ago. The political environment is much more complicated from old days. But as a single investors, if you want to successful in China, I want to give you some useful tips. For example, if you make investment, you better to choose big cities. For example, Shanghai, Guangzhou, Beijing, Chengdu, Chongqing, Shenzhen. These are the big cities that can they have a better business environment and legal environment. You have to be very cautious to go to, for example, just as John said, you go to Heilongjiang, east, west, north area. For those cities, they don't see foreign investors that much. So you probably, you can't have a very good communications with the government, with authorities, that will make you feel very difficult to have your life, your investment in those cities. So do choose those big cities. And also the last thing I want to say is you need to have a good Chinese partner. I mean, you probably can have a very good joint venture partner, Chinese partner, or you have good advisors in China before you make decision to do the investment here in China, because I mean the system here are very different. So you need to be careful about your Chinese partners, because you don't necessarily understand each other very good. So do to be very careful to choose your Chinese joint venture partners. I mean, just one last sentence is, do have a very good advisor in China, because they can guide you to make your investment here. I mean, otherwise, we can have like 10 or more webinars to discuss political environment, legal environment. But if you want me to say one final sentence is, you need to know someone really, on ground people, really good your partner advisors to help you, to guide you to make investment in China. That's it, Marcos.
Well, that's an excellent way of closing our debates. Unfortunately, we have to stop here. I could keep this discussion going on for a long, long time. I have many questions in my mind, and I think the audience would enjoy the continuation of this discussion, but we have to stop here. Ronaldo, would you like to say something before we close? Microphone, please.
Yes, I would like to thank you very much for your moderation of this panel. Thank the speakers. I think it was a very challenging and very motivating debate. As you say, we could stay here the whole morning or the whole day discussing. But I would like to say that as the sponsors of these last few webinars, I feel very pleased, because I think we have made a small contribution to the better understanding of the business environment in China. And I think this is very valuable for the members of CEBRI, for our audience, and for future investors in China. And I think one of our missions, as you pointed out in the beginning, is to facilitate the understanding of things in China, the business environment, the political environment, the social and cultural environment. And I think these 4 seminars have made a small contribution. And I feel very pleased, and I want to thank CEBRI for having accepted our proposal to joint venture with them. I want to thank also Ambassador Castro Neves for his contribution as the chairman of the Brazil-China Business Council, and wish you all a very pleasant evening or pleasant day. Thank you very much, Marcus.
Well, I agree fully with you, Robert, Claire, John. Thank you very, very much for your participation. As I said, we could keep discussing this for hours, but we have to stop at some point. But I think the main message is there. And the audience was very faithful to us. They kept listening to our debates, with a lot of interest, I can imagine. Thank you very much, and goodbye.
Bye.